How you doing, everybody? Stock Option Sniper here. I hope you're all doing great. Today, I want us to talk about banks, supply, and demand zone. Last week, we had an amazing trading week. We did amazing. All our teams was winning. We had a huge run down and huge run up. Market has been very choppy overall for like the past 2 weeks. However, we are capitalizing. We're just playing in and out in the market, right? So even though with that chop in the market, we're still continuously making income, and that's the beautiful part about having a strategy and having a trading plan every time you go into a trade. But like I said, this video is about banks, supply, and demand zone. So I just real quick, I want to show you guys a couple example on what I mean by that. So as I've shown you guys from the previous video, right? We have stocks going higher highs, higher lows, and higher highs. We are looking for these structures right here, right? And then we are looking for demand zones where we can set ourselves up around this area for market to just run, right? Self-explanatory. If you've been in tune with my video, you've seen that multiple times and you just keep doing that over and over, correct? So that's basically what we're doing here, and we're just looking for those example and vice versa when the market is on the opposite side, right? Get that example drawn for us here, right? So we have that structure, we have the POI, which is the point of interest, and this is where that manipulation happens, where the pump up, oops, right, where the pump up happens, faking everybody out, grabbing liquidity, and mitigating that last portion, that last unmitigated zone, and then bringing the price down in this bearish scenario, right? So let's look for example like that. Let's look for some SPY example. I was trading SPY and QQQ all of last week, right? So for the past previous weeks, SPY has literally been just playing in this chop right here in this zone, right? I believe I talk about this in one of my video back around, I believe it was this December 15th. I believe it was like somewhere around December, at least it was December 13 or 15. We're right around up here, right? We're talking about that. I'm not going crazy unless we touch this, and we're basically going to take out 287, right? 287, what is that? Around 410, I'm sorry, 410, around this high, right? This 410 right here from this zone. So we're looking to break that, but we want to see price action come from here and then come from this zone and have that run up there, right? And eventually having prices to go higher and take liquidity and fall. So let's see what's going on here, right? We're having that run up. We are still trading in this huge range, right here, right? So we are looking to see I'm looking to see some run up. It's not financial advice. So how did I get that little zone that this SPY has been trading in? Well, I've understand that I am in a structure here in this range, right? From this high, protective high, to this protective low. So what's happening here? Well, basically now we have SPY just playing around in that area, right? I had this area for a very long time. This is the entire high right here. You can go to my daily. We've been playing around from basically this entire range, this high to this range, right? It's a huge range. That entire range. That's where we are right now. That's where we are playing, right? Right now we are literally in the 50% imbalance. So I'm still very bullish on this until we break this 347, right? If we're not below this 347, then I'm good. I'm good on my calls, right? This right here could possibly be a markup. This right here could possibly be a markup on what's happening right now, right? We having that run down, that run up, excuse me. We having the 2. We had the 3. We're having the 4. This I'm doing some Elliot, right? And then we're having that 5. So potentially I can't see this, and like I said, as long as I'm in this range, I like it, right? Back to 429, I like to see that fall. If I can see 429, which I have the alert right here, this been here for months, for almost a month now. But overall, like I said, we're still in that range, right? But this is basically what we're doing. I want to go show you guys some example, right? Like last week, you could have just literally played the market up and down. As you guys can see, it's literally just playing in range for weeks. All you literally had to do is, let me take this out. All you literally had to do is literally find those chops, right? So you know you're trading in a range. You know you never broke a certain a certain area. So you're basically just playing here in a chop. You're here, right? So all you could have been doing is, okay, where's that break of structure right here? It's right here. This is the last down move before the up move. All you had to do was find that candle that was responsible for that move, which was this green candle that we have, right? Because this is that responsible for this break of new structure. So from here to there, right? So now you're trading this mini structure, this entire mini structure, right? So what's going on here? Well, you're shorting. Once you short, did not touch, it fell. Now you waited, you come up to that zone, and what happened? You have price falling. You guys see that? Now you have that run up. Now you're going to look for that new structure again. Well, did it break structure? No, we're still bearish in this scenario. We're still bearish. Hang on. We're still bearish, right? Why are we still bearish? Well, because we never broke the 374. 374. I don't want you guys to get confused because I did say I'm still bullish. However, this is a bigger schematic for me right here. This entire thing is a huge schematic. I drew it out on the daily. We're trading in this entire huge range, right? We're just clearly playing inside this range, and technically we are doing just intraday and scalping throughout the lower time frames, right? But just bear with me here. So let's say we did break above. I show you guys in that structure trick video. So we did break above this structure right here. We got out that zone. Did we have a body close? Yes, we did. We fill in that gap. We had that body close just right there. I like that body close right there. So I asked myself, where am I responsible for that? Well, all this right now is deleted because we just created a new structure. So this entire schematic right here became a new structure, right? This entire impulse, if you want to call it, right, is a new schematic, right? It can potentially come down here and have price come down. People's like, okay, we're back to bearish, and then have that run up again via catalyst of news, right? You just set yourself up to win, and now we keep going higher and higher, taking out this high right here on the higher time frame. So I like that. Or we can have another liquidity grab that can happen all the way right here. We can have an absorption right here, right? An absorption. So basically absorbing all the orders, grabbing all the liquidity, closing this gap, and potentially going higher, right? But as long as we are above, we don't close below this zone right here, this entire structure, we don't close a body close like what happened here. Body close, we're still good. I still like it, right? But overall, like I said, I'm very bullish. Let's look for little scalps right here. QQQ was my best friend. This thing was making me money last week. I did go short here on QQQs. I tried to short here, but it didn't want to short. So I got stopped out there. I took a break even. But this week right here, this right here was just extremely beautiful. This play on my QQQ. I threw this out to the community. I believe it was in my community, in my QQQ live trading. No, this was the QQQ live trading. It was a QQQ recap, right? I had this entire structure right here. I had a demand zone right above my zone for that green candle. And we literally have that mitigation on during that run up in the morning. I said, guys, we're taking puts here, and literally just fell back to 263.47. This 263.47 has been here since the previous structure right here. There was a point of I was playing the structure. I believe it was here, somewhere here, in this video. 264. No, let me get my daily. Yep, it was right here. It was this point of line right here. This was around December. Right about here. I had this red candle and I told myself, listen guys, I'm not taking anything when it doesn't touch here. And I did a catalyst, right? I was trying to confirm it in the zone. However, it did break lower, so I was okay with that. But I did give you guys a scenario. I put it in my community chat. It was like a mini video clip where I wanted the market to do this, right? In the zone, go crazy. It was supposed to be at 263.48, and then just have that run up all the way back, taking out the 300, right? I 294.67, right? So that's a beautiful trade. That's what I want the market to do. It can do the opposite, but it's okay. Right now, I do see the market trying to go to 274, so don't be surprised when you have that. These are the bank and supply demand zone, right? That's that last down move. That's the orders that they created. So now what I'm just basically looking for, well, all these are fluff to me now, right? They're basically useless to me. Just taking them out. I just want to clean up the chart for us, right? So now what am I looking for? Well, did I have a break structure here? No, I did not have a break structure. So what am I going to do here? Well, I did not have that break of structure. We did have this rejection right here. So I am looking for prices to come down here to this red area, to that last down move before the up move. And once we have price come down to that area, we're most likely going to break down lower. Maybe absorb some orders around this 259 to grab all the liquidity around in the area right here, right? Taking some sell stops around this area and stop losses, and then we can take prices higher and higher, right? Or it can literally just break and go high without us, right? That's totally fine too. But we do have a point of a POI around this area, and I want to show you guys how amazing it is. Let's go to a random trade. We've been doing this to Exxon. I also had an example with Exxon where Exxon was gonna go crazy. We love Exxon, right? Around this area right here, I can take this out for us just to clean up the charts. Right, we have this huge order block 2.0 from this high to this low. So I put that around that area, and what happened, right? We have mitigation, and look, price just starts to run up, and you just set yourself up to win. If you did refine that zone, it's totally fine, right? You would have probably refined around 50% around this area. So if you refined it 50%, it'll be here, but you missed that move. It's totally okay. But in this scenario, we did not refine, so it was totally fine, right? This was in a higher time frame, and look at that. So from around 102, 102.29 to 110, that was a beautiful trade. Had a little chop, but overall, it's playing beautifully, right? We're looking to take out that 214 because overall we are still in that uptrend. Yes, Exxon is still an uptrend, believe it or not. Look at the weekly time frame. This is how I measure that right there, from that high, from that wick to this red candle. That's on my weekly right there. We have a mitigation pullback, and I already knew people was going to start shorting Exxon. Why? Because they kept saying that, hey, this is overextended, this is too much this is too much pumping, and they're going to get confused, right? Just hydrating real quick, excuse me. Right, so we have that POI, we refined it in our 4-hour, and we're literally just looking for those setups, right? Beautifully. Look at this, you guys. You can keep doing that over and over. Just look for this point of where the bank made this huge moves right there. You guys see that? This is beautiful right here, you guys. Look at that mitigation. What happened? Just runs. This is beautiful, guys. Do your own due diligence, though, please. And it's vice versa on the other side, right? If you have this POI, you can look for that last down move before the up move, which was pretty much here. Or you can take that wick, right? I give this out to my mentor. You can take that wick as a refinement. And what happened once you get those wicks, guys, these are gems. I hope you guys are not sleeping on this, right? We know wick itself is an unmitigated portion in a lower time frame. It's its own supply zone, right? So what happened there? Look at that. It comes up to this price, just fall, comes up, comes down. All you're doing is shorting and shorting, shorting and shorting forever, right? And it's vice versa. When you get those huge moves like this and you find these last down move before the up move and you're just stretching them, right? Look at that. Just beautiful. Delivering and delivering, right? Over and over. So right now, Exxon, did we get a close on Exxon? No, we did not get a close on Exxon, but we did have a liquidity grab. So we can, I'm not shorting Exxon because I see it going higher. It's breaking structure to the upside. So I'm most likely going to go long once it gets up down here, right? Up here, down here. Yep, I like it down here. We can have the price play around down here just a little bit from this high to this low. And it'll be an excellent, it will be an excellent play, right? I'll take that. You guys see what's going on here? It's pretty simple, right? Apple is just dying and dying. I just want to show you guys what's happening here. It's there's a lot more to it, but I'm just showing you the basic on what's going on. I haven't shown you guys how to refine it, what time frame to use, which zone is more probable to holding. So I have to show you guys that, right? You can see this here. You can have this last down move before the up move and you just wait for your price. And this is where your discipline comes in. So you're just waiting for price to happen. It doesn't matter if it can play here for days, right? Like what it's doing. Once it touched that zone, you can look for longs, right? And target these highs right here on Apple. And Apple from 124, excuse me, from 124 to 129, you can take those nice moves, right? From 125 to 129. Apple does not move that much, but if you played Apple before and you have multiple contracts, you definitely can make some money on this, right? But right now it's super down. It's on a super downtrend, so I most likely like it short. I'm most likely to short Apple, right? And what am I doing? I'm taking down this 129 to 124, right? I'm a short on Apple, right? I show you guys the top down analysis. If I'm long on a stock, I'm not going long. I just gave you guys that example, but this is what I'm looking for on Apple, right? Apple is just dying and dying. I even have Apple on 124 going next, and then it's going to 114, taking out these lows, right? And I have a POI around this area. I believe this was around the quarterly. Was it the quarterly? No, it was a monthly. Was it a weekly? Let's see. I want to make sure. Yeah, it was a weekly, right? But we also have one in a quarterly around this area. So that weekly right there, I'm looking for a bounce on Apple. I could take some, little bounces. However, we are in a super downtrend right now, and we are closing right below. So, yeah, guys, I'm looking for that. And right there, we got a beautiful setup on Apple right here. So this is just what you're doing, right? And I show you guys multiple example in Exxon, how you're taking these plays like this, right? And they're just falling, right? Demand zone, just falling. I show you same thing with SPY. Let me see the SPY. Like QQQ, for example, as well. Right, these zones right here. Yes, you have these zones. Look at that, bouncing off that 263. It looks like they're building up their position here, you guys. You got to pay attention to that. When you're in a when you guys are seeing stocks that are going up, right, and just accumulating, please don't get confused thinking that is a downtrend. If you know your overall play, right, this is a huge POI right here from this high to this low, for example, right? This is our demand zone. This right here, guys, don't confuse that. That is your mark up right here. Once you see that downtrend, you'll be like, oh, it broke equal highs, right? Equal lows, I'm sorry. Like right here. It broke equal lows. Therefore, we're going short. Once it tests that, you don't know that this is actually preparing, that was actually a reaccumulation, and the price just runs without you, right? You're like, oh, that was just a markup. It was an accumulation. So therefore it ran without me. Right? You guys are confusing this. You guys are confusing to intertwine the higher time frame to the lower time frame. Do not get that confused. Right? We've seen this multiple times on Exxon. Exxon just did this last week. Right? Because some of us are looking at the lower time frame and be like, okay, it's done. And then Discord is pumping up over in a bear market. We're in a bear market. We understand we're in a bear market. But they're not looking for high probability setup. Right? No disrespect against anybody and how they trade. There's some traders that make tons of money, but I'm just saying what works for me. Right? So on the weekly right here, we have an understanding. Excuse the messy chart. I love using this example for my students. Right? We have a POI right here. This is on a weekly. So we knew this was coming down because it's been on a run up, but they had a POI here manipulating for it to go down and then pumping it up again. So therefore they left a lot of open orders here that was left unmitigated, right? So now what they have to do is bring back those prices to mitigate those positions and bring the price higher and higher. So now when people see this red candle on the daily, that entire run down that Exxon is dying, Exxon is short because it's overextended, they're getting confused to the point that, hey, Exxon is still in a run up, therefore it is just accumulating. And they're getting killed by this false structures on top of that. Right? They're going short. Oh my God, it's gonna go short, right? It's grabbing liquidity, and what's happened creates that spring and just runs without them, not knowing that that was a mark up in itself, right? I showed you guys the market cycle. I have that in my videos, in my previous video, right? In my past video. If you look in the first video, you'll see it there. Right? You have your accumulations. This is the market cycle. Accumulations. You have that markup. You have the distribution, right? Then you have that markdown. You guys see what's happening there? This is basically what the market is doing. Pay attention, guys. So when you have this mark up and in the lower time frame, the stock is playing around here, right? It's playing around here. Have an understanding that it will run. Have that understanding. You are in a higher time frame. It's never breaking structure, right? I hope I brought awareness to you guys on what's going on with that. But that's exactly what's going on here, right? The market is still a bit choppy. It's still in a range. So if you're not as much experienced as a trader, I would suggest to sit out. And if you guys are just accumulating position, even experienced trader, right? Sometimes you have to learn how to sit out. We think that trading every single day is going to make us money, which it can. However, you do put more yourself at risk when you're not trading high probability setups, right? But anyway, guys, I just want to share that quick tip with you guys on the bank supply and demand zone. I hope you use it. If whatever is working for you, keep on doing it. I'm just here to add more value and bring more awareness to what it is that I'm learning, that I'm sharing with you guys, right? Guys, I love each and every one of you, and I'll see you on the next video. Peace.